Hey folks, Dan Frio here, the rate update. Today we're going to talk about your down payment. Millions of people are looking to buy a house, but they just lack that down payment. So we have a down payment assistance program to help you guys out and avoid all the confusion out there. So don't go away. We're going to talk about that next. Down payment. How much do I need to buy a house? That's what I hear every day. Well, just let's start from the beginning. What your down payment is basically your skin in the game when you're buying a house. So let's say, for example, you're buying a $100,000 house. We're going to use that as our benchmark right now. How much do you need as a down payment? A lot of people are going to say 20%, and that is wrong. You can put down 20%, but most people are looking for, what's the minimum I need down? I need to make sure I have the minimum, then I can always put more, but there's also more pieces of the puzzle than just your down payment. So let's go over this, but when we're done with this portion of it, I'm gonna go over a down payment assistance program that we have available to you to avoid all the confusion, and it can give you up to 6% of the purchase price of the home. It's a grant and it's forgivable over 5 years. Okay, so the first thing I want to talk about is how much you need. Okay, and then we're going to talk about the assistance programs. So there are first-time home buyer programs on the conventional loan side of the equation, and you need 3% down, even if you're not a first-time home buyer. Here's how a lot of the first-time home buyers guidelines read, and a lot of people don't know this. You cannot own another property at the time of closing. Now, there are also programs for first-time home buyers that you could not have owned a house in the previous 3 years. So you need to make sure you're working with a lender that knows all these programs and they're able to have access to them and able to put you into these programs. Okay, so that's that. So when we start talking about the down payment, the first one is 0%. What programs don't require any down payment? Well, those are VA and USDA, okay? Then the next lowest down is a conventional first-time home buyer program. We call it the Home Ready program to get you guys ready to buy a home. It requires 3% down, okay? Then the next caveat down the food chain is FHA. FHA requires 3.5% of a down payment. Okay, so those are the programs and the guidelines available to you for the minimum down payment. Okay, so let's cover that right now. So let's go through it. 100,000 was our benchmark. So if you're going with a VA or USDA loan, it's 0. Okay, the conventional Home Ready program, $3,000. FHA, 3,500 because it requires 3.5% down. But there's more. Okay, so what you're going to need money for your appraisal. You're probably going to need money for your home inspection. Those are two different things. The inspection part that you have an inspector go through, it's usually basically a contractor. They're going to go through everything, the electrical, the ceiling, the plumbing, your furnace, your air conditioners in detail to make sure you're not getting into the money pit. All right. So that's that part of it. But more comes along. What is your attorney fee going to be? They're probably going to charge you $400 to $500. Okay. Then you're going to have closing costs. So there's legal sides of the equation. There's also lender fees. So I always explain it this way. There's multiple buckets of where money is needed. So the first bucket is going to be your down payment. So let's say you're going even with a down payment program that has 0 down, because you don't need any money. Okay. So the next bucket we're going to talk about is what's the lender fees. Lender fees usually range from about $1,000 to $1,500. Okay, so let's mark that down. Let's just go with the high end. You're going to need $1,500 for your lender fees. Okay, so the next piece of the puzzle or the next bucket is your legal fees. Okay, this is where it kind of throws everybody for a loop. Your attorney and the seller's attorney, one of them handles the legal piece of the puzzle. They both kind of do, but usually the seller's attorney will use a title company of their choice to do most of the legal work behind the scenes. The average cost for that's probably, as you as the buyer, it's going to cost you probably about $2,000 to $3,000. Okay, so that's on top of the lender fee of $1,500. Okay, so now you have a lender fee of $1,500. You have $3,000 in the legal piece of the fee, so that's $4,500. Now you're going to need money to set up an escrow account to pre-fund an account in your mortgage to pay your real estate taxes and your homeowners insurance when they come due. That, usually it varies widely, but let's assume that number is $1,500. So just between those three equations, you can see how much money adds up fast. Okay. So now let's get into the, how do you find down payment assistance programs, or which one is beneficial to you or most likely for you to be able to use? Well, if you look up down payment assistance programs, it's going to tell you there's over 2,500. Okay, that's where it can really get confusing. Okay, you can go in state by state and see which ones are available in that state and in that region. But the problem there is your lender going to accept it? Okay, if you're working with a broker, most brokers don't have the ability, a mortgage broker, most mortgage brokers don't have the ability to offer down payment assistance programs. Okay, so that eliminates probably half of the country's mortgage originators in this program. All right, then the other ones, the other lenders out there have to actually be signed up to offer these programs. We have programs nationally. We have programs state by state. We even have programs that go by county. Okay, so the one I'm going to talk about today is one that's offered all over the country that we have. You don't have to go out and find this. We will help assist you directly when you're applying for the loan. We get your loan pre-approved as well as your down payment assistance program pre-approved for you, so you know what you're getting into. All right, so let's go over the parameters of the down payment assistance program that we have available for you guys. So here is our nationwide down payment assistance program. So let's go page by page so you understand what you need to do and how you can qualify for this program. So the target client that we have: borrowers that have achieved financial stability, borrowers with lack of down payment or reserves, borrowers that have demonstrated the ability to save. You have the propensity to save. A lot of people do. It's just hard with today's world, between the rent that you're paying, student loan debt that you have, car payments, and just life in general. It makes saving really difficult. Purchase clients with no seller credits. A lot of times we'll ask you, hey, is the seller willing to give you maybe seller credits at this time? In today's market, it's hard enough just to get your offer accepted versus having the seller accept or give you back credits to buy their home. It's not happening right now in 2021. Borrowers with limited savings, and then the down payment assistance program may be used to meet the product's minimum down payment investment requirements. So that's what we're trying to do. We're trying to help you meet the minimum down payment that you need and also help you pick up money to pay those costs that we were going over. So the down payment assistance program we're going over today, that's what DPA means, down payment assistance, is the Within Reach 2.0 FHA program. Okay, it'll offer between 3 and 6% assistance. So let's break it down. Within Reach FHA loan limits. So Within Reach is a competitively priced government program that does not require minimum down payment from the home buyer. It'll provide you up to 3, 4, 5, and even 6% of the purchase price as assistance. And the proceeds from the Within Reach program can be used for down payment, closing costs, prepaid items, and earnest money. That's exactly what we spoke about right at the beginning. I said there's more money needed than just your down payment and closing costs. The prepaid items are the items that I said you have to pre-fund your escrow account, meaning we force place basically a savings account inside your mortgage to pay your real estate taxes and your homeowners insurance as they come due. And that's required on all FHA loans. The next thing is the Within Reach FHA program. There's no minimum borrower cash investment required. It's a 30-year fixed 100% amortized loan. It can be used for manufactured housing. Conforming FHA loan limits apply. You have to check your geographical areas. Just reach out to us. We're going to assist you all the way through this process. And the down payment assistance is calculated off the total first mortgage loan amount, including the MIP. Okay, so let's go over how and what you might qualify for. If you're a 640 to 659 credit score, you can qualify up to 5% assistance, and your maximum debt ratio is 45%. I'm not going to go over all the specifics. I just want to lay this out to you just to show you how much money you can get by by taking advantage of this program. With a 660 or higher credit score, you can go all the way up to a 6% of the 6% down payment assistance, and the DTI, or the debt ratio, is dependent on your FHA findings. In many cases, you can get a debt ratio up to 57%, believe it or not. Okay, 160% of the area median income is required for you to qualify for this program. Again, we can assist you with that. Income limits are calculated from the income reported on the URLA. That is the loan application. That's the income we're qualifying you with. No cosigners or non-occupant borrowers are allowed. FHA does allow non-occupant co-borrowers in normal cases, but for the down payment assistance program, they do not. Borrowers must occupy the subject property as their primary residency, and one of the people that are going to be buying the house has to pass a home buyers course. It's really simple, and we can walk you through that as well. The next thing is verification of rents. If you're a borrower paying rent, then we need to make sure your rent is paid on time for the last 0 times 30 in the last 12 months. We can do that by verification of rents if it's a company that you're paying, or 12 canceled checks that you're paying your landlord, or so forth. And we can get a written VOR or 12 months bank statements to prove that as well. If the borrower lives rent-free, you're going to need a little cushion at the closing, so 3 months reserves of the PITI requirement. Basically what that means is after the loan closes and you bring all your money to closing, we need to just show that you have 3 months of your mortgage payment still in your bank account, to just make sure that you're not going to have any issues once you buy the house, and to, your next couple mortgage payments are there in a safety net that we don't have to worry about you making those payments. The next thing is just giving you an idea on how much money you might be able to get. Okay, I misspoke before. I said you're going to get up to 3 to 6% of the purchase price. But let's go through just an idea how this works. All right, the purchase price for the 3% down assistance program on a $450,000 loan. Again, purchase price. Why this is being used is that's as high as the FHA loan limits go in most cases. You would get $15,000, or down payment would be needed. The down payment needed would be $15,782. Okay, because that is 3.5% of the purchase price. That brings your base loan amount to $435,118. FHA charges an upfront FHA fee. Every FHA loan has this, so don't freak out when you see this number, because if you have an FHA loan, you paid it. And it's financed, though. You don't have to bring it to closing. That means the upfront mortgage insurance premium. So FHA is going to collect $7,614 on this, bringing your total loan amount to $442,733. Okay? And then your total assistance in this program would be $13,282. Okay, let's see how it moves all the way up, how this 6% comes into play. You bought that same house, you're going to need $15,782 as your down payment. And again, guys, remember I said there's more costs than just that. Remember that part of it. So that brings your loan amount, or your base loan amount, to $435,118. You add back that FHA fee right here, brings your total loan amount to $442,773. So all these sections are the same. The only differential is right here, your 6%, 5%, 4%. Those are reflective down in the bottom. So this is how much, right down through here, on the 6% assistance program, you would get up to $26,000, over $26,000 in grant money that's forgivable over 5 years to use to buy this property. That can cover your $15,000 you needed to cover your closing costs, other lender fees, title fees, legal fees, closing costs, attorney fees, appraisal fees, and everything. So basically, you could do it with this program. You probably wouldn't need to bring 1 penny of your own cash to the closing. All right. So the next thing is, how do these work? Well, it's a 5-year mortgage with 0 interest. Okay. It's forgivable. Completely forgivable. 0. You owe nothing after 5 years. So in the 61st month, this thing completely gets wiped out. Borrowers must remain current on the mortgage for the second to be forgiven. So you can't miss any mortgage payments on the primary mortgage. Otherwise, we're going to have some issues with your second. And then in the 5-year period, the soft second, this is considered a soft second because there's no payments required and there's no interest. It must be paid in full if you refinance or sell the house within the 5-year period. Again, after 5 years, it's completely 100% forgiven. So again, let me cover that again because a lot of people miss this. If you refinance or sell the house within the first 5 years, you're going to need to pay off this second, whatever is owed, and it gets calculated on a 1/60th per month. So that's the equation. So just basically, if you stay in it for 5 years, you don't owe a thing. If you sell or refinance within 5 years, you're going to owe a prorated amount of the money that you received at closing back, okay, as a payoff. And then soft seconds, no payments on the mortgage, no second mortgage filed, no second mortgage needs approval. We lock you in. The down payment is not required. We don't lock you in. We basically lock in your FHA loan. All this is done behind the scenes and no requirements to request a down payment assistance. You just tell us, hey, Dan, I don't have the money. I need you to help me with my down payment or help me with a down payment assistance program. And that's what we will do. And last but not least, questions. So if you have any questions, just let me know down below. Or the best way to reach me and my team. So if we can assist you guys in this program. So you're like, Dan, I really like this. I'd love to buy a house. I'm just lacking that down payment assistance. Or you're a realtor out there. You want to know about this. But most of all, if you're a consumer out there and you're like, Dan, I want to buy a house. I just don't have the money. This is the program for you guys. Okay, so how do you find out more about me and my team? Well, the best way to do that is to go to my website. And here it is. And this is popping up. If you're requesting, let's just get out of this for now. If you watch me every day, you know what's going on there. But if you want to reach out to us and find out everything you can about this program, please give us a call at 844-775-LOAN or schedule an appointment. You'd have a one-on-one consultation with one of us. You can do it by Zoom or phone call, and we can answer any and all the questions you have at that time. So thanks again, guys, for watching. I greatly appreciate it. Hopefully you find value in this video. As always, if you do, please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. God bless, guys. I'll talk to you soon. Bye-bye.